Hey everyone, welcome to a real quick update. Hopefully it's going to be real quick. We've got Trump talking in about 22 minutes here. And I want to take a look at a couple different things here. I want to take a look at the S&P. I want to take a look at Dow Jones. I also, of course, want to take a look at Bitcoin. I'm going to start, though, I'm going to start with the Dow Jones. And before I get started, of course, this isn't financial advice. I'm not your financial advisor. You're responsible for your own trades, managing your own risk, doing your own research. This is just my opinion on the market. Um, I've had a little bit of a wrong streak here lately, and so hopefully that's going to be coming to a change here. But I want to take a look at a few things. So let's go ahead and take a look. I'm going to start here with the Dow Jones. All right, I'm going to take a look going all the way back to 1929. And I promise I'll do this quick. Let's go back to 1929, back when we had the Great Depression, okay? So basically when Dow Jones, when this ticker started accumulating was back here in 1914. It started at 5470. Went all the way up to about 380, and then it crashed all the way down to the bottom, which was right here. So from the top down to the bottom, it took about 35 months or 1,065 days for it to lose 90% in value. I want to use this as a basis for measurement on what we are currently experiencing today. So let's go ahead and fast forward here. Let's go forward to where we're at now. Again, these are all monthly candles. Let's take a look at 2008 before we go forward and take a look at that. All right, so in 2008, from the top to the bottom, this was 17 months, 518 days, half the amount of time approximately from what we had in 1929. Again, let's just take a look at this here. 1929, 1,065 days. In 2008, the recession, we had 518 days. All right, so now let's take a look at where we are right now. But before I do, this is a Fibonacci pull that I'm using from the very bottom back here. Let me go ahead and pull this back because I think this is going to be important when we're trying to measure things. So we've got that pinpointed down the very bottom. Now let's zoom in on what we have going on today. All right, so let's pinpoint this top also. Pinpoint this guy up here at the very top. And I'm going to zoom in and see how far we are in this. All right, so I'm going to try and get this just right. I'm pinpointing this up here at the top. And keep in mind, you guys, we are just in the beginning of this. So we are literally 28 days. We're a month into this if we're going to compare it against prior bear markets. We'll call it bear market, recession, depression, whatever you want to call it. We are 1 month in and we are down 31%. Okay, we're down 31%. I don't want to take a look at how many points we're down. I want to take a look at percentages because percentages is more relative than points. If I said that we were down 90, 91, 9200 points, well, then going all the way back to 1929, it wouldn't make any sense because we would be, negative 8,800 points. So that doesn't make sense. We have to look at it from a percentage basis. We've dropped 31% in about a month, all right, and we're only a month into this. And it's, if you compare the velocity in which we are falling is even faster than what we had prior, all right? So the first month, when we hit the top, first month actually ended green. We did not do that. We had a very, very solid red candle. The next month was red, but we were still at about the level that we were 2 months prior. Well, if you take a look at this second candle, we've basically gone back to the levels that we had back here in 2017, early 2017. Basically, 3 years of gains have been erased over the course of 1 month. And it doesn't look like it's going to stop. If there's any glimmer of hope, there are people that are taking a look at this, so I will go ahead and point this out in case there's anybody here that's not paying attention. Right here, we've got something like this going on, as well as something like this going on. Okay, when you have a broadening wedge like this, usually it means that it's going to explode to the upside. I would sort of expect this to happen. If we're looking at it from the top, and then we've got an A, a B, a C, a D, and then working on our E, which still, depending on how long this takes, this could very well happen that Dow Jones goes all the way back to 18,400, depending on, again, how long this takes. There will be a point where this starts to level out and then has one last move down before it moves up. I would say that if this expanding wedge works out, we can't violate this yellow trend line. So keep this all into perspective. So we've got that all figured out. All right, so now I'm going to go down to a daily time frame, and I want to take a look at Bitcoin. If you haven't already, I would love for you guys all to take a look at the video that I did a few days ago. I did a Bitcoin capitulation video where I outlined all of this in as clear detail as I possibly could to try and outline any kind of a bull case Bitcoin has. So again, it's been a couple days, so I want to talk a little bit about where the market is right now, okay? So we went through all of this history. I'm not going to repeat it. You can go back and watch that video. It was very lengthy. I tried to make it as thorough as possible. I hope you guys can appreciate that. It was about a 40-minute video that I did. I talked through this entire market up and the entire market down. I talked about a blow off top and I talked about a capitulation bottom. You can go back and watch that. So I'm going to drill down to a 1 hour time frame here. I want to take a look at this because obviously I haven't changed my chart here, but I think that things have changed. Okay. One thing that I am a little concerned about is the fact that this looks like an A, B, C, and then we've just created a 1, 2. Okay. So I'm going to mark, and I'm going to do this in red because this is a continuationally bearish count. So if this is an A, B, C, mark this in red, that would mean that this is actually not done yet, which is probably going to scare some people. It is possible that what we have started here is from up here, a 1, a 2, 3, 4, 5. I'm going to mark this in red as well, and I'm going to lower the degree on this to a minuscule, which means we've got one more push lower to go. Again, I'm on an hourly time frame. Now, if we're taking a look up here from the top, so it looks to me like this is potentially a 1 and then a 2, 3, 4, and then we're going to come in for the 5, which means that we unfortunately do have lower to go. I know that's probably going to freak a lot of people out, but this is an alternate count. You have to have a plan for both directions. I did make my bull case, but now I want to make my bear case. I think the bear case is probably the easier one to make right now, if I'm being honest with everyone. The bear case is easier to make. But let's take a fib pull from the top here and pull ourselves down to where we bounced. And right now we're at 51.27. Again, I bought in at 5,000. I have very little profit, but we're struggling here at the 50. We're struggling here at the 50. You know, we had a nice push up. We made a new high, which is okay for an ABC, but now we're looking like we created a 1, potentially a 2. We can still go up to about 5,300 here. We can still go up to about 5,300. The level of invalidation for the bearish count today is going to be here at 59.83. If we cross 59.83, chances are very good that that this bearish count isn't as bearish as I'm about to explain. But if we're making a 1, 2, that means, let's say that we go ahead and push all the way up here to 53.25. Okay, 53.25 from the top. So we've got, from up here, we've got a 1, Now we've got a 2. Again, we're going to take this up here to 53.25, or as close as we can get to it. And right, 53.21.50 is close enough. So wave 3, okay guys, wave 3 is going to take us all the way down here to 2,700. And if we go all the way down to 2,700 from 53.25, again, I'm going to try and get this as close as I can. If we go all the way down here to 2,700, we're probably going to come back to 3,500, and then our low is going to be sitting down here waiting for us at 2,300. Also, I expect this to happen. If it does, I expect it to happen before April. This is, if it is going to happen, it's going to happen before April. I have been maintaining through the last several months, rather, that April is going to be green, and I fully expect this to be completed before the end of April. So this projection out here is taking us down to about March 25th. It would not surprise me one bit for us to come down here to these crazy, crazy levels before the end of March. I can definitely see that happening. I do have technical analysis on Chainlink, but I'm not interested. I'm responding to a comment here on YouTube. I'm not going to be sharing any charts on altcoins, at least at this time. I think there's too much uncertainty in the Bitcoin market in general, so I want to avoid trying to make any recommendations on buying. If I'm talking about Bitcoin going down to $2,300, you probably should not be in any altcoin position at this time. Of course, if the market does turn to go to the upside, so in other words, if this was and happens to be a 1-2, that's a different story. But we have to overtake 5,800. We have to overtake this level right here, which I had also outlined on my video, which is sitting there at about 5,600. If we overtake that, different story that we're talking here. Hey Todd, how are you doing? But for right now, things look very, very bad. The 12-hour has actually crossed bearish again. We have our hourly getting overextended. The 3-hour is still looking pretty good, but this thing can also flip to the downside again. Okay, so, full disclosure, on our indicator, we do have, a bottom that formed here. We had a little bit of a bounce. You had an opportunity to get out. The 3-hour crossed bearish about right here. And then down here, we also had a little bit of a bottom. We had a little bit of a bounce. I think we're going to have another opportunity to get out, probably around 53.30. I do want to talk about Bitcoin being correlated to the stock market. So yes, I do want to talk about that just a little bit. But nonetheless, I think Bitcoin has a potential, and it probably has a higher probability at this point today in going down more short term before it does turn to the upside. So just be ready for it. I would say buying anywhere between 2,000 and 3,000 if it gets there. I think that is potentially a generational opportunity for you to get some decent gains on Bitcoin. You're just going to have to kind of be willing to weather the storm. Spot buys only. Do not go on any leverage positions right now. In my opinion, I would not do any leverage positions right now. Okay. So let's talk a little bit about the S&P. I do share this with all of my people on the Discord server. If you're not on the Discord server, I highly suggest that you join, and just throw in a comment if you'd like to join our Discord server. I want to talk about this just for a moment. Because we've been tracking this since the beginning. I'm looking for a move down to 225. If we move down to 225 and we bounce there, sounds like Trump's getting ready to talk now. But anyway, just really quickly here, I think that we move down potentially 225 and we get a good bounce there and a rejection, likely going to move down to 182. So just really quickly to kind of wrap things up, because I know Trump's getting ready to talk and things are likely going to start moving here. I am long-term bullish on everything. I'm long-term bullish on the stock market, long-term bullish on Bitcoin, long-term bullish on metals. I think that metals are devaluing because there's a lot of people that are selling in order to make their margin calls. I think that Bitcoin is also moving down. For some of the same reasons. I don't know if there is any safe haven like crypto, for instance. I don't think that it's a safe haven right now. I don't think metals are a safe haven right now. Really, your safe haven right now, if you're interested, is probably just sitting in cash. Because there is going to be a generational opportunity, and I've said this in my Discord as well. There's going to be a generational opportunity to buy in and to hold that for a long, long time. But right now, things look like big sells. Things are looking like they'd be a sell. Potentially, again, going down here to 225 and then going down to 180. Your next question is, well, where's it going to go after that? Probably a bounce back up to about 240. And then my model has this thing going all the way down to about 130. And this is looking, probably by June. Again, just think about it this way. Jobs reports are going to be terrible. We're going to have lots of part-time workers that are going to be on unemployment. And these are all factors that are going to hurt the market. I think earnings reports for some companies are going to be really great, like Walmart, Costco. Earnings reports for other companies are going to be absolutely atrocious. And a lot of these things are going to be transportation companies. They're going to be some manufacturing companies. And I think it's going to really hurt the market in a big way. And so these are all things that you have to consider and get into these things early, because by the time we get there to these earnings reports, I wouldn't suggest shorting the market then, because look at what we've already gone through, okay? And I was just showing that on the Dow Jones. We've already gone through like a 30-40% reduction. I think it's more like 30% pullback. So, I think it's started. I think we've got time, but I think we've got another strong push down to go ahead of us. But I also think if you're interested in trading options or anything, I think it is very dangerous at this point to open up new positions, because decay is going to hurt your puts. That time decay is going to devalue your puts, and premiums are very high right now. So do I think all of these markets are correlated? In a sense, yeah, I do think they are. And the reason why I say that is because this is affecting the global markets. This isn't affecting just the United States. This is affecting Italy, France, Germany, China, Australia, the United Kingdom, United States. This isn't just something that's just tied to one country. This is affecting the entire world. So therefore, yeah, I think all of these markets are correlated in the fact that the whole world is being affected by this. And so that's why I'm saying, it's probably a decent idea to just be sitting in cash and waiting. I'm going to continue to be here for you guys, and I know I've been a little distant here recently, but I'm planning on being back a little more regularly, and trying to keep an eye on everything. But again, if this video did help you in any way, shape, or form, like, subscribe, share. If you have any questions, tag me on the Discord chat. You can also shoot me DMs, but tag me. There's been a lot of chatter on the server, which I'm very, very humbled by. And sometimes these things can kind of get caught, in the history. So, tag me, DM me, whatever you'd like, and I'll be more than happy to answer any questions that you guys have. I've got some things I need to get back to now, and of course, listening to what Trump is going to say that could potentially affect the markets. But yeah, wherever you are in the world, I hope you're having a good day, good night, good evening. Be very careful out there, be diligent, and stay safe.